Have you spent thousands of euros and now you finally have the German driving license? Now the next step can be very straightforward but confusing because having your own car is often one of the most expensive financial decisions in your life as an expat in Germany. But how should you pay for it? Is it best to take out a car loan, or is leasing a much cheaper option? Or maybe it's better to buy the car directly. Perhaps buying a used car in Germany would be the right choice for you. I'll discuss all that and will also do some calculations to which options would be the best for you. By the way, if you're new to the channel, my name is Essen. I'm a researcher, and on this channel we discuss how to succeed financially in Germany. When you're trying to figure out the best way to buy a car in Germany, the first thing to ask is, do you already have the money for it? And I'm not just talking about a new car. You can be thinking about a new used car. So do you have enough savings for a car? And are you wondering if you should spend it all or still think about leasing or financing? Let's take a look at the three main options. If you buy a car, you become the owner of the vehicle and don't have any other financial obligations after that. You could think of your car as a part of your assets, since in theory you can always sell it later for money. However, the loss in the value as the car gets older affects your assets directly. Also, you're responsible for all the repairs and other costs. Because of the high interest rates compared to previous years, financing a car, meaning taking out a car loan, doesn't seem that attractive anymore. But this still remains an option. Now, financing means you borrow money from a bank to buy a car and pay it back in monthly installments over a set period like 3, 4 or 5 years. By the end of the loan term, the car is fully yours. Of course, the monthly payments include interest, which is basically the fee for borrowing money from the bank. So it adds to the overall cost of the car. You can set up the loan in different ways, like making a down payment at the start or a large final payment at the end. While financing means borrowing money for the car, leasing means borrowing the car itself. Leasing is basically long-term car rental. The car remains the property of the leasing company and you pay them a monthly fee called the leasing rate for a set period like 2, 3 or 4 years. At the end of the lease, you return the car to the leasing company. Basically, there are two main things to consider when leasing a car in Germany. First, the loss in the value of the car that you have to pay over the leasing period. Second, the profit for the leasing company, because they want to make money from leasing. This also depends on the general interest rates, since the leasing companies finance their cars with loans from the banks and they pay interest on those loans. Now, if you have the money saved up to buy a car, you'll have to deal with the car's value dropping over time. You cannot avoid that, whether you buy it with cash or finance it. If you pay in cash, the loss in value is reflected in the car's worth going down. With leasing, you pay for the loss through the monthly lease payment. What adds extra cost to both financing and leasing are interest rates with financing or rental fees with leasing. So if all the other factors are the same, like the price of the car including any discounts, buying the car with cash is always the cheapest option because you avoid extra costs like interest or fees. Now, some of you might be thinking, if I have 18,000 euros saved up, why not finance or lease the car and invest the money instead to make more profit than the interest or fees I would pay? That's possible, but here's the thing. Over the typical 2 to 4 years of financing or leasing, there's no investment that can guarantee you'll earn more than what you'll be paying in terms of interest or fees. Whether you invest in the stock market, gold or real estate, there's always going to be a risk that you'll make less or even lose money compared to what you'll have to pay for leasing or financing. Don't let recency bias mislead your decisions. Please hit the like button if you're getting value from this video and consider subscribing. To narrow down the options of buying, financing or leasing, let's look more closely at the value loss of cars. It's well known that the cars are a depreciating asset. Some even consider it as a liability. But how does a car depreciate or lose its value over time? To answer that, here's the average value loss of a car over its lifespan. Assuming it drives 15,000 kilometers per year. What stands out is how quickly the car value drops in the first few years. In the first year, a new car loses about 25% of its value. In fact, depending on the new car model you choose, 10 to 15% of its value normally vanishes the moment you drive it off the dealer's lot. After 3 years, a car is roughly worth half of what you have paid. And after 4 years, the value loss slows down to about 5 to 6% a year. After 10 years, the car is worth about 10% of its original value. You'll also see that the average repair cost increases over time. So you cannot avoid the roughly 50% value loss in the first 3 years, whether you buy, lease or finance it. Financially, it's not the best idea to buy a brand new car or even a car that's only a year old. For example, if a car costs 40,000 euros after 3 years and 45,000 kilometers, 20,000 euros is just gone, used up from driving. And that doesn't even include fuel, insurance or maintenance. Most of us won't lose money this way with anything else in our lives. It's important to know that leasing almost always involves new cars. There are some options for leasing used cars, but it's rarely worth it. That's because you miss out on the big discounts car manufacturers offer on new car leases, and the risk of needing repairs during the lease period increases. So if we say new cars are not worth it because of their steep value loss, leasing is also not a good option in most cases. Of course, this varies depending on the car type you are buying. However, the used car market in Germany isn't following this model I just shared since 2020. It turns out Germans are hanging on to their cars longer than ever before. In fact, the average car on the road is now 10 years old, a new record. Since 2024, the average age of cars has gone up by more than 20%. Why? Well, one reason is that cars today are built to last. But that's not the whole story. Since 2020, car production has dropped dramatically, down to an average of just 3.4 million cars a year, way below the 5 million mark we saw in the past. Since supply chain issues like semiconductor shortage and global disruptions mean fewer cars are being made, which means buyers have to hold on to their vehicles longer. And fewer new cars on the market, you guessed it, prices go up. Between 2020 and 2023, new car prices in Germany shot up by almost 16%, and new cars up a staggering 33.5%. Just in the last decade, the average price of a new car jumped 58% from around 27,000 euros to over 42,000 euros. Used cars, they have doubled in price from 9,420 euros in 2013 to 18,800 last year. If you are hoping to snag a deal on a used car under 10,000 euro, good luck. In 2019, 44% of used cars were in that price range. By 2022, the number has dropped to just 23%. It's not just car prices going up. Interest rates have also climbed. That, combined with the economic uncertainty and higher energy costs, is making people think twice before buying. And here's the kicker. Things aren't expected to get cheaper. New emission standards, Euro 7, coming in 2025 will push production cost up by about 2,000 euros per car. On top of that, Germany's increased CO2 tax will make gasoline and diesel even more expensive. I'm no expert, but let's do some basic calculations. Before that, if you're already subscribed, don't forget to turn on the notifications so you don't miss out on videos like this one. Alright, a brand new T-Cross from Huawei starts from 24,355 euros. Leasing a similar car would cost about 188 euros per month with 1,290 euros preparation cost if you drive 10,000 kilometers per year. At 6.3% interest rate per year, you would pay 5,802 euros for the 2 years you keep it. If you look at a T-Cross, which is a little over a year old with about 19,000 kilometers, it would be 17,300. So 7,000 euros less than a brand new car. An almost 4-year-old T-Cross with 26,000 kilometers will cost you 14,500 euros. And here's the calculation for financing your whole car. Obviously, this is not an apples to apples comparison, but I just wanted to share some rough estimates. Here, maybe you should ask yourself, isn't it just our own vanity that makes us want a new car or an almost new car? Are we trying to show off our shiny new car when it would actually be much smarter to buy a car that's 3 or 4 years old and still in good condition? That only you can answer. In short, if you have enough savings to buy a car in Germany, it's smart to buy a used car that's around 3 to 4 years old. You'll avoid the big drop in value that happens in the first few years. A 4-year-old car with about 50,000 kilometers is still reliable and can last a long time. Check out these websites for used cars in Germany. You'll definitely find something that fits your needs and budget. It's best to pay for the used car in Germany in cash if you can, so you don't have to pay extra interest on a loan. If you cannot pay the full amount, try to make a down payment and finance the rest of the amount. That way, your loan would cost you less. My first car in Germany was a 20-year-old car with 139,000 kilometers. It did cause some minor issues, but I was overall very happy with smart decision. So even very old cars can be a good decision if you are on a very tight budget or know a thing or two about used cars. RDR say the German Auto Club says that if a major car repair costs about half of what the car is worth, that's when you should decide sell it or fix it and keep it driving. Before then, it's usually worth doing repairs, even if it costs a few €100, especially if your car is around 10 years old with 140,000 kilometers, given the high prices of used cars in Germany. But after about 12 to 14 years, cars tend to break down more often, and that's when you should start thinking about getting a different car, not necessarily a new car. Now, buying a car in Germany would definitely be something that you should celebrate. But there are some other financial milestones in Germany that most people often forget. I share those in this video. And in this video, I share how to buy a house in Germany with zero money. So thanks for watching, bleib gesund, and I'll see you in either of these two videos.